At higher levels, market made an attempt to show intraday upside recoveries in between, but higher levels, the selling pressure emerged and market declined within a range bound, within a choppy movement. So this is the intraday. On the daily chart, a small negative candle was formed. So what we can observe from the chart on the daily chart is that market, after a sharp decline, market has made an attempt of upside bounce from the lower levels. At 19,200, 19,200 level is a strong, happens to be a strong resistance, and market failed to sustain above that levels. So we initially mentioned that the market, even though Nifty shows upside bounce, the Nifty decisively moving above the area of 19,200 to 19,300 is going to be very difficult, as market turned down from the higher levels and currently showing consolidations and weak with a weak bias. At the lower levels, 18,835 is the 18,850 is the recent support, and 18,837 is the recent swing low, which is a 20-day moving average. You can see this is the moving average, 20-day exponential moving average. This moving average has acted as a strong reversal points in the past over the last 1.5, 2 years. Whenever the indices has broken or touched the resistance or support lines, the significant movement has happened in the past. So recently, after the reaching the support of this 200-day EMA around 18,850 levels, market has bounced from the lower levels from 18,850 to 19,200, 19,230 levels in the previous 2-3 sessions. After that, corrected from downward. Now, what we can observe is market, though market is in a weak trend, but we are witnessing absence of sharp selling interest. Here on from the high of 18,850 to 19,850 to 18,850 levels, around 1,000 points from 17th of October to 26th of October, Nifty has witnessed a sharp decline, a long range bar candle which is visible. After that, the sharpness of the weakness has slowed down. Now currently showing more of a range bound action. This is very interesting. As a market in a bearish trend, we expected market to come down sharply, but this time market is showing range bound action. This is very interesting, and I'm expecting a downward further weakness for the Nifty some more, and the important support of 18,850, 18,830 levels, which is 200-day EMA, is expected to be reached or slightly broken below that. In the past also, we have seen Nifty taking supports and resistance of this moving average. Friends, you can see it over the last, you can take it from the May 22 or the last 1 year. Here, market has taken resistance, declined, and here the broken above the resistance, moved up, and a couple of instances it has taken a support of this 200-day EMA and moved up significantly from the 200-day EMA. I think this 200-day EMA is likely to act as a crucial role reversal area in coming sessions. So we expect a market movement within a range at the higher levels. 19,250, 19,300 is going to be the strong resistance. Any upside bounce could encounter resistance at the initial hurdle of around 19,100 levels. If moves above 19,100, then 19,200 to 300 is going to be the strong resistance for the market. At the same time, very important support of 18,850 level, which is a 200-day EMA, is approaching. If Nifty breaks below 200-day EMA, 18,600 to 18,800 is going to be the range at the lower levels, where one may expect the next round of upside bounces from the lower levels. On the weekly chart, Nifty is still looking weak. After a sharp weakness, Nifty showed a follow-through weakness so far this week, but the weakness, the sharpness of the weakness is not that much as compared to the previous session. So this support has been broken last week on the downside, and Nifty made an attempt of move below this weekly support as per the change in polarity, failed to sustain above 19,200 levels. Again, moving below this support. Now this is going to be crucial. On the monthly time frame, the trend, the long-term uptrend remains intact. The correction, as we have seen, the large degree of higher bottoms in the past, and whenever the market has declined subsequently after the upside moment, it has bounced back from the lower levels. Currently, market is placed at the support around 8,900 odd levels, 19,000 levels. At the lower levels, 10-month moving average is also placed around 18,800 level. So there are supports for the market on the lower side, and we are expecting that Nifty is, though Nifty is weak, we could see some more weakness towards 18,850 to 18,600 range level before showing next round of upside bounces. The confirmation of upside bounce could call, we will call that upside bounce, we will give the upside target subsequently. And on the, we'll see the broader market. If you look at the mid cap after the bounce, it has shifted into a consolidation pattern in the last couple of weeks. The weekly chart pattern is not that much positive, but the mid cap on the weekly chart placed at the support of a 20-week EMA, which is very important. Recently it has taken support, and after such a sharp upside momentum over the last 6-7 months, the broader market indices is currently taking a breather, showing a consolidation type of pattern. Recently we have seen an attempt of downside breakout of the range. So on the small cap on the weekly chart is the similar kind of thing. Pattern has been formed at the lower levels. 20-week EMA has offered the support. Small cap have recovered last week from this support and currently placed at the 10-week EMA on the small cap front. So net to net, this broader market indices are showing a choppy movement, minor weaknesses there. Overall chart pattern is still weak, and we have to be very selective in stock picking, and whoever getting good profits in mid cap and small cap segments, better to book profit, as we are not witnessing any sharp upside momentum. As last couple of months, the momentum has shifted into a range bound action with a downward correction, and better to stay away at least for some mid caps. If you have any mid caps with a good profit, better to book profit, and one has to be selective. Look at the other sectors. Other sectorally, chartically, PSU banking, realty, oil and gas, FMCG are looking positive. On the other hand, automobile, IT, metal and pharma are looking positive. PSU banking, if you look at the chart, friends, PSU banking after sharp upside reversal, it has shifted into a consolidation moment. There is a promising upside momentum is there. One may expect further upside gradually in this sector. And next, realty. One may look at the IT. IT is the one, it has showed the upside bounces but failed to upside bounce and closed slightly below the 200 EMA. This is a little bit of concern. One may expect some more consolidation for the IT. And if you look at the metal is been continuously in a downtrend. From the 7,000 level, it's almost reached the 6,350. There is a support of 200 EMA, which is currently exactly placed around that support. I think the overall chart pattern for the metal sector is indicating that there is a probability of the downside breakout of this support in the near term. And if you look at other sectors like FMCG, currently moving in a consolidation, we haven't seen any sharp weakness. We haven't seen the sentiment damaging in the FMCG sector, as it is moving in a range bound action and well above the 200 EMA. And automobile on the other side is looking weak. Last 7-8 session continuously coming down. We could see further weakness in the automobile sector as well. So this is all from about technical perspective of the market, broader market indices. And once again, I reiterate to inform that we are in a range 19,200 to 19,300 is going to be a strong resistance for the market on any upside bounce from here. And at the lower level, 18,850 could be the support, where 18,850 to 18,600 is the support where one may expect upside bounce from the lower levels. That's all from my side. Over to Mr. Devarsh.
Okay, thank you. Is screen visible, Nagaraj?
Yes, it is visible.
Okay. So this week we have issued two MTF e-margin BSPL recommendation, Punjab National Bank and Mangalam Cement. We have also issued two fundamental recommendations, Thomas Cook and Harris. Apart from that, we have issued a Diwali report, Samvat 2080 report, where we have recommended these 10 stocks. This report is available on our website. We have issued the LTP price and also given you the buying range, two levels where we need to accumulate these stocks. Stocks are Dr. Reddy, Equitas Small Finance Bank, GAIL, Godrej Industries, Grasim, Gujarat Alkalis, Indian Oil Corporation, Kalpataru, Reliance Industries, and United Spirits. So we are also launching a somewhat 2080 small case basket. You can either choose any of these stocks for a longer term investments or invest them as a basket through our website. So two recommendations which we have issued today is Thomas Cook and Eris Life Sciences. I'll speak about 1 minute each. So Thomas Cook, we are asking investors to buy around this 127 and 105 range. The price was 124. The targets are 138 and 149. Tourism backed, because of the disposable income is increasing, the growth in tourism is there, and that's why as economic grows, companies like Thomas Cook will be able to profit from the boom which is being there in the hospitality industries. It's a turnaround case, and the risk reward is now favoring the investors. Again, in the pharmaceutical domestic formulation business, we have issued a recommendation on Eris Life Sciences at 840. So around 840 and 759, we are asking investors to accumulate this stock with a target of 914 and 998. Again, there's a domestic focus formulation business, and they are strong in cardiovascular, anti-diabetic, and vitamin segment. And we are expecting a healthy growth of around 11% in this company over the next 2 years. That's why we have recommended these two companies. Apart from that, I wanted to highlight about the performance of the research recommendations over the first half, April to September. Many of the categories, if you are a trader in derivatives or in e-margin, amazing performance has come from our team, and I recommend you to look at this performance and use this research to benefit out of it. Similarly, around 124 recommendations on the fundamental side have been closed. 114 were in profit and only 10 has incurred losses. 91.9% kind of return success ratio is there on the fundamental side, with the average return of 14.3%. So amazing ability to identify good stocks by the team and recommend them has been there. So I recommend everybody to go through this research and use research to generate profits out of it. Now let's look at any questions if you have. So depending upon the screen you are using, if you have any questions regarding any of these recommendations or any sector or stock, you can ask us and we'll try to answer them. So meanwhile, by the time the recommendation or the questions are populated, let me ask you a question, Nagaraj. So you said you showed the PSU bank as one of the sectors where we are seeing signs of some recovery, and IT is the sector where we have recently seen the downward breakdown. So can you identify some stocks or from the charts which stocks are looking strong on PSU side, banking side, or any technology stocks where recently we have broken any support? Can you highlight some names?
Yes, as I mentioned, PSU banking sector is looking positive. After a reversal, it has moved into a consolidation. If you take the names, recently we have issued the PNB, SBIN, Bank of Baroda, Canara Bank are the some stocks which are chartically looking positive. They seems to have formed a near-term bottom reversal and likely to move up. On the IT side, the IT side is a little reluctant to move up. Recently, we have seen a small upside bounces and failed to sustain the upside bounce in the last 2 sessions, and IT sector has declined. There is a support currently placed at just more below that support of 200 EMA. I think if support takes on the downside, then IT majors like TCS, Infosys, HCL Tech, Wipro are likely to come down further in the near term.
All right. Okay, I think we have come to the end of this session. Feel free to share your feedback and suggestions with us. With that, we can close this webinar. Thank you, Nagaraj, for joining. Thank you, everyone, for joining.
Thank you.